Okay, hello and good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Anucauskas. Today is the 19th of October 2018. So, welcome everyone. Welcome to this Friday's morning session. So, the last trading day of this week. So, yep, welcome everyone. So we're in this session we're going to have a look at a few instruments. I believe it could be quite interesting to watch today. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, then we can continue. Okay guys, so now then, let's not waste any more of our time and let's jump into the charts. Now the first one I want to touch on, and that's the FTSE 100. So I'll probably switch to a daily chart on this one, and because we can see then a better picture here what's happening with the FTSE. Basically, I was covering this one in this week, and I was looking for a potential correction here to the upside. We did get a correction to the upside, slightly at least, of course, but this is where it got held around the 70.75 zone. Sorry, yep. So this is the kind of the resistance area that kind of continues to play out. Of course, keep your eyes on that one. At the moment, I mean, of course, yesterday, as you can see, we had a decline here. The market's kind of closed in the bearish zone, so in a way we could see further continuation here to the downside, where we could then test a possibly test the level here near the 6970. Of course, above that we do have the psychological 7000 level as well. Could be quite an important area of support, and this is where we're probably going to look at initially, but for now I would probably recommend to stay cautious here, because in a way it would be a bit difficult to trade this little area that the index is within right now. So this area is between the 6,970 approximately there on the downside, and approximately around the 70-75 on the upside. So in a way you could wait and see until we get like some sort of a break here, either through the upper side of this little area, the little range, we can call it that way, above a break above the 70-75 could potentially open the path towards the next possible area of resistance here near the 7110 zone, or if you want to be more on the conservative side, then in a way you could wait for a possible move above the 7110 area. Now, just to kind of remind you guys, this was the high that we saw around the 29th of March, so a nice good break above that could potentially lead this one towards higher levels like 7190, or even slightly above that. We could eventually test this long-term upside support line that has been running here since around the 11th of February 2016. So we could anyway get back here and test this line, but for now, to be honest, for now this continues to look weak, and we could maybe see a second leg of selling here. But for us to get comfortable with the downside, we would need to get a break here below and a close below the 6970 in order to kind of aim for much lower levels, like the 6870 level here that was marked by the lows of the 26th of March. So quite an important area to watch here right now, guys, and especially quite important levels. So let's wait until we get a break, and then probably we'll react to this one. Okay, let's jump into a few pairs now. So the one I wanted to touch on is the euro dollar. Now euro dollar continues to move downwards, and let me just put a 4-hour chart on this one, guys. So it continues to move lower, but as you can see, it found good support near this area here, near the 114.45, and as you can see in the past here, in the recent past actually, it acted as a very nice area of support. It kind of held the rate from dropping lower, and acted as a very nice bouncing ground for the bulls to step in here. So for now, we're going to be very cautious. If this downwards momentum is going to continue, then we could eventually see a break of this level here, a break of this 114.45. Now certainly you could be still cautious here. Even if we would get a nice break here below this 114.45, you could remain in a way a bit cautious, because we will look at this level, this potential area of support here at around 114.30. As you can see, was marked by the lowest point here that we saw around the 9th of October. So in a way, this could become another important area to watch, the 114.30. A nice good break below that could in a way open the path towards much lower levels like the 113.95, or even actually all the way here going back towards the 113 zone. So certainly there are some good levels and below here, but for this one, for such a scenario, we would need to get a nice good break initially, of course, below the 114.45, and then we're gonna keep a close eye on the 114.30 and see how the pair reacts to that level. Because again, if this is gonna hold, if this 114.30 is gonna hold, then well, potentially we could be forming here a double bottom, as you probably can see yourself. So in a way, for now, of course, let's not over speculate here too much, and let's see how actually this plays out. From the shorter term perspective, on the upside here, you could in a way look at this potential level here, the 114.75 zone, approximately there. A nice good break above that could maybe lead this one a little bit higher, but again, as I said, from the very short term perspective, keep your eyes on this little downside resistance line as well, to kind of in a way could hold the rate down, even if we're going to get a nice break above the 114.75. Certainly this could play out, that it could move above it, but then get rejected here near this downside resistance line and then push back down again. So in a way, for us to kind of get comfortable here, we could start looking at this 114.75, but that would be only like half of the probably confirmation here. For better confirmation, we would need to see a nice good break here above this downside resistance line, where we could then aim back towards this level right here at around 115.35. That kind of the pair broke through on the 17th. So some quite important levels here above here, but then again, like I said, keep your eyes on this little short-term downside resistance line for today. Keep an eye on it for today, because and of course, like I said, keep an eye on these levels here, these support zones that I was just talking about, the 114.45 and the 114.30. Jumping into GBPCAD now, as you know, today we do have the Canadian CPI figures. So as you can see right now by this pair, looking at this 4-hour chart, the pair is balancing near its 170.10 zone, so just slightly above the 170, the psychological 170. So basically, in a way, a nice good break below this 200 EMA here that we've got shown here as the black line. A nice good break below that could potentially lead towards further declines here, and this is where we could then test the 169.25 zone, marked here by the lows of the 9th of October. So quite an important support zone to keep an eye on. But to be honest, if that doesn't hold, well, we could see further declines here, maybe even going all the way here towards going back all the way here towards the 168.05 area. So and the 168.05 kind of acted as a very nice area of support here around the 5th of October, and also acted as this inside swing high here that we had around the 1st of October. So also a very good level to watch. But again, for all these levels that I just mentioned, we need to see a nice good break here below this 200 EMA here on the 4-hour chart, and this way we could, like I said, we could position ourselves initially for a possible test of the 169.25, and if that doesn't hold, we could then start looking at lower. On the upside, if this reverses back to the upside here and tests the 171.20 zone, now before that, before it kind of gets here to this 171.20, we're just going to continue observing this one, because we could see maybe something like a jump here, a spike to the upside, but then quickly, if the bulls are still going to be weak, the bears could kind of pick up on that, and we could see maybe another drop lower. But so that's why I'm saying for now, until we kind of get to this 171.20, we're not going to touch this pair. We're just going to continue observing it, even if it's going to show a nice bounce here from the 170.10 zone. But again, for us, like I said, to get comfortable with the upside, or an upside at least for a little bit, we would need to see a nice good break here above the 171.20, and this way we could then aim for the 171.60. And if that doesn't hold, well, guess what, we could then start looking at the highs here that we had around the 10th of October, and that was approximately around the 172.85. Jumping into USDCAD, so USDCAD here, yesterday I was talking about this one, and I was telling you guys to keep an eye on this level right here, the 130.50. As you can see, we had a nice breakthrough through that level. We had a spike through it, and now we're getting a bit of correction back to the upside. Now the question here is this correction gonna lead to actually a break of this 130.50, and then from which we could like continue moving lower, or actually this is gonna act as a nice plateau for the bulls kind of to step in and drive this one higher. Now yesterday, let me just quickly mark one level here. So yesterday it found its resistance here near the 130.80, or actually a little bit higher here, 130.85 zone, from which kind of retraced back lower. So for now, in a way, this level here becomes quite an important one to watch for today, of course, because a nice good break above that could, of course, initially target the 131.10 that I was talking about in one of my videos. And if that doesn't hold as well, then, well, this kind of, in a way, the sky is the limit for this one, and we could then, or should I say, the sky is the 132.10 zone. So let's put it that way, guys. So I mean, the 132.10 could be a nice area for possible resistance, and this was marked here by the highs that we saw around the September time. So I would probably suggest to stay calm here right now. Just continue observing this one, see how it reacts to the 130.50. If it bounces off of it, that's wonderful, probably for the bulls here. Then we'll, like I said, we'll start looking at the yesterday's highs at around 130.85, and if that doesn't hold, well, I mean, this could be a nice opportunity for more bulls to jump in here and drive this one higher. If this gets back here below the 130.50, well, I mean, keep your eyes on this little level right here then, especially for today. So a nice break below the 130.15 zone, as you can see, was marked by the intraday kind of swing low here. The 130.15 zone acted as a very good area of support. So a nice good break below that level could open the path towards this quite important area of support that we got here around the 129.20 zone, so approximately there. So keep your eyes on that one, but only if we get a break here below the 130.15. So again, guys, some quite interesting levels to watch here today. We could get a bit of volatility here today. Like I said, the Canadian CPI figures are coming out, so yep, keep your eyes on these levels here, the 130.15 on the downside, and on the upside the 130.85. And the last pair that I really wanted to quickly touch on, and not a lot of you probably look at it, but it's nevertheless, it's performing quite interestingly from the technical side, of course. So as you can see, this is the US dollar against the Russian ruble, and lately, since probably the mid-September, the Russian ruble was strengthening here, but it's now found its support here near this lower bound of the rising channel that the pair is trading in right now. So it has been within this rising channel since around the beginning of April, and currently at the moment, currently should I say yet right now, it's testing the lower side of this rising channel. Sorry. So in a way, this is where we're going to keep an eye on, because if we get a break here below this lower side of the rising channel, then, well, our next potential target that we're going to watch out for is the 65.05, or actually let's round it up towards the 65 zone. So the 65 zone going to be a quite important one to watch, because if we get a break here below the 65 zone, now of course we'll start looking at much lower levels like the 64.30, or even actually going all the way here down towards the 63.39, or you can also round it up towards the 63.40. And this is around the 200 EMA that we've got here on the daily chart. So in a way, quite an interesting spot here right now for the USD ruble. And of course, on the upside here, keep your eyes on this little level right here. Let me just quickly adjust this. So in a way, keep your eyes on this 67.10 zone, approximately there, of course. So a nice good break here above this could potentially confirm that the pair wants to continue staying within this rising channel, and we could see the Russian ruble depreciating again here against the US dollar, and moving towards these higher levels. The USD ruble could be moving here back towards these levels that we saw around September time. So, but for now, like I said, it's quite an interesting spot right now where the pair is trading in, and keep your eyes on these levels that I was just talking about. So the on the upside here, the 60, let me just get rid of this, 67.10, and on the downside, the 65 zone. So a nice good break through one of these levels could potentially confirm further direction further direction either to the downside or to the upside here. So in a way, like I said, you keep monitoring this pair. Not, like I said, not a lot of people look at this one, but to be honest, we look for trading opportunities everywhere. Okay, guys, thank you very much for watching and listening, and I hope you found it useful. And if you want to join me later on at my Traders Tea Time, and that's 13:15 GMT, 14:15 British Summer Time. But for now, thank you very much, and bye-bye.